So why? Because it's like a second hub, a financial center. When we look at East, we look at very few options, like Hong Kong, Singapore, and so on and so forth. So it has been hub for the banks, it has been hub for investment banks, private equity firms, and so on and so forth. Being a financial center, it's important for whosoever is trying to pursue a career into that, understands every aspect of it. As a result, we have a demand for candidates or people, be it entrepreneurs or who are working onto for some firms, that they should be in a position to understand how and what's the use of financial modeling. The basic and the rudimentary understanding which comes to my mind for financial modeling, when if it comes to somebody's mind, is like a a sheet, Excel sheet, which gives you some numbers about a particular company or sector or a group of companies, which talks about some numbers, historical forecasting, ratios, and so on and so forth. Yeah. That's quite rudimentary. That's actually just some part of when it comes to financial modeling. It is vast. It is way beyond that. Now, modeling means structuring. If I get the civil industry or the construction or infrastructure sectors use this word quite often. When I combine a financial with the word modeling, it is a representation or a structure of a particular company or an asset class or a group of companies, be it at a sovereign level, something like sovereign wealth funds, or be it at a government level when you're talking about central banks. So it's a combination of the numbers which go inside them and the output what we are seeking onto for. So financial modeling is, if you observe the things around you carefully, when you're talking about a cell phone or when you're looking at your bank accounts or credit cards and so on and so forth, somewhere or the other you would see the implication as well as the application of financial modeling. A model would be there to support the transactions what you're seeing onto the front end. So that's what we are trying to understand today. What's the financial modeling? What it has a big role to play into not just the BFSI sector, but overall sectors, primarily into BFSI, and what we can learn from the sessions as well as how we can apply them. A model can be formed for anything. You take any asset which is nearby you. A modeling can be done of human resource. A modeling can be done of an asset class or a company or banks in particular, which the forms as an output of a certain structure. Let me give you a basic example. If I'm looking at a financial model, it acts as input as well as output both. So it's an input for any of the transactions I'm negotiating, any of the deals, or the buying and selling of securities or the bonds and so on and so forth. So it's an input for the end transaction. Now, how does it act as an output? It acts as an output for what kind of asset you're looking into. And if I have to describe that asset class or a company in form of the numbers, in that case, that the financial model acts as an output. So every company, in effect, aims for a higher value. They either do it through organic structure or inorganic. Both the things are incorporated into a model. They look for greenfield ventures or brownfield ventures. Both the cases are incorporated into a financial model for a particular company. So overall, when we are looking at a financial model of a particular company, then we are looking at the kind of the projects they have been doing, executing, what they're going to look for, the strategy of the company, the operation side. From top to bottom approach, all the things are incorporated in form of the numbers there. And they would talk about the capex, they would talk about the cash flows. A financial model would represent in what we are looking for. I mean, if there is some sort of infusion of the capital. So we're looking at financing side, we're looking at structure side, we're looking at operation side, and we're looking at all these aspects combined into a financial model. So it's basically a numeric or mathematical representation of understanding of any asset class. When I say asset class, a company also is a combination of various asset classes. Okay. So I can quantify or I can form a model of a commodity as well. It's not restricted to a company. I can form a model of the central banks as well, and so on and so forth. Now, what are the purposes of financial model? We look at the mathematics side, like a model has to be primarily clearly giving the picture of the asset class in picture. So it has to be really simple. It has to be dynamic in such a way that if I change any particular input there, the whole model should give me a final value onto it. Now, it has to be a predictive tool. I can use it for calculations of various ratios, be it DSCR, my debt service coverage, be it interest service coverage, be it how the company is looking at its working capital cycles, how the company is managing its fund-based and non-fund-based limits. That is your existing long-term loans, as well as your bank guarantees, letter of credits, etc., etc. So it should give me what's an average cost of borrowing this company is incurring and the risk quotient attached to it. So not just looking at the revenues, the cash flows, but I'm looking at the risk factors as well. So the financial model should be in a position to give me all this through in one go. Of course, any asset class or any company, a model is formed to arrive at a certain value. That's where all transactions can be striped out. So if I'm looking at an investment banking area, if I'm looking at an investment banking arena, the models will be used for pitch books. If I'm looking at a securities firm, the models will be used for a research report. If I'm looking at any infrastructure company, the model will be used for how did the project, be it on a public-private partnership basis or purely partnership basis, would generate a cash flows for me in the future. So I'm looking at all the areas. I mean, whether we look at a regulatory portion, that is the big four, or whether we look at an investment banking and securities side, be it a pension funds, be it hedge funds, everywhere there is an application, direct and indirect, for the financial models. Now, what are the carriers that we are looking at when it comes to financial modeling? The valuation is an inherent part of any position which you look into a financial markets. I may look at a regulatory side. In that scenario, it's used in form of evaluations of what's the implications of direct and indirect taxes into a particular country. What's the implications of those in a cross-border sales transactions which are happening inside a company. When I look at inorganic side, the valuations are used in acquisitions. They are used in funding through the private equity routes, through various financial institutions. So they are used in hedge funds, pension funds. You're looking at various positions there, from analysts to group managers to managers to equity research analysts, the investment partners, the CFPs, the research analysts, and so on and so forth. So be it a risk management arena or be it a front-end financing, which is constantly negotiating with the clients onto the transactions, the use of financial modeling is clear and abrupt. These are some of the green signals, as we call them. But of course, what we are interested into is a long-term usage of whatever applications we are going to learn through financial modeling course. So I'm looking at, on an average, $100,000 $85,000 to $100,000 in Hong Kong, plus 30 to 40% bonuses, depending upon which arena I'm talking about. If it's an IB, it would be 30 to 40%. If you are into bulge bracket investment banks, it can go as high as 70 to 80% a particular year. If I'm looking at a securities firm, 25 to 30% in these brackets. So on an average, the investment bankers or the research analysts are drawing 30% higher than the overall sectors for these similar positions. So if I'm looking at a managerial position as in finance manager, and vis-a-vis compared with a finance project manager inside an infra firm, so I'll be drawing at least 30, on an average, 30% higher than what an infra project manager is drawing. Now, why these numbers are so lopsided? The reason is simple. It demands the best brains out of the industry. So for being best, or for projecting yourself or selling yourself to the companies, or even to your clients if you're operating a boutique investment bank, you'll have to have the abilities of presenting everything in form of a model. Let me give you an example onto that. One of the top 5 private equity firms were hiring for entry-level analysts. Now they asked a few questions about the background, etc., in doing interviews. But the most important and evident question that was there, a decisive factor for why I should select a particular candidate against the another, or why should I give preference to this candidate over the other. They asked one question. It was form an LBO model. Form a LBO model. That's leveraged buyout financial model. If you do that, you're selected. It's in real life scenario. They were offered 100,000 USD plus up to 75% as in your bonuses year on year, and the growth is 10 to 15% on an average year on year. So form an LBO model. If you form it, you're done. On an average, if a new person is sitting to form a leverage buyout model, it would take around 8 to 9 hours, and they had to finish that in 4 to 5 hours. So if you are accustomed to it, if you undertake this particular course, and then you would be in a position to draw these models a lot quicker than what an average person would take. First of all, it's understanding, and then the speed alongside. So they tested everything of that candidate through one question. They tested his speed, his Excel skills, his understanding of structures of what the problem it was given, as well as they tested his ability to be creative. That is, when you're forming a model, it's not just science, it's an addition of creativity as well. So that you have to, in such a way that you have to deploy the complete structure of a transaction into a model. So that's what we are looking at when it comes to average salary of a financial model. Now, what's the outlook in Hong Kong? We have seen many firms from UK, North America have shifted their headquarters base in Hong Kong. There are many firms which have been completely placed in Hong Kong. That is, they have been shifted from North American, say, energy division out of UBS, was shifted to another energy division inside Hong Kong. So the best of the brains are being getting deployed there. The reason being simple. They're seeing a huge chunk of transactions as well as revenue through trading activities of stocks, exchanges, etc. getting in there. So there is a demand, there's a clear-cut demand of good candidates who have the ability to apply into the quite challenging scenarios. Why? Because you're expected to deliver things in a quick time, so in a very quick time. So this would help you to develop your speed, clear your understandings about how to form a model, and also develop to an extent the understanding of how to deploy a structure into a model. So there are clear-cut employment opportunities. We are expecting in another 12 months a straightforward hiring because of demand pickup from US and Europe, primarily US, as they occupy, or they are still forming the 33% of the major chunk of the overall transaction activity which is happening across the globe. So North America still forms a major portion, but Asia is taking over and in a good speed. And Hong Kong is the base for that. So plus there is an expected hike in the salaries on an average 3 to 5%. We are expecting from pension funds, hedge funds, when we combine IB activities, etc., up to 25 to 30% bonuses, and so on and so forth. Now, what are the skills required when we are looking at these kind of candidates? That is when I'm sitting on a hiring desk inside JP Morgan, for example, in Hong Kong, say in an IBD division, that's investment banking department, looking for a structured transactions candidate. I would look at how strong his fundamental understanding is, if there is any prior experience, if they have any experience, or has he got enough understanding of investment banking activities, and is he good enough onto the financial modeling? That is, can he develop a valuation model when I give him some 5 companies, and that too in a quick time? So they are checking your sales and accounting, audit and tax, risk management, as well as financial modeling skills. So it's a combination. When I'm looking at a accounting side, I'm looking at the profit and loss balance sheet and cash flows modeling. When I'm looking at a risk management side, I'm looking at the modeling of the risk matrices. And when I'm looking at a front-end IB or research activities, I'm looking at the valuation skills of the in form of the financial model. So it forms core part of all the 3 types of activities. This is how, on an average, an associate manager and AD and director draws when it comes to equity research, investment banks, and private equity houses. So equity research still commands more in Hong Kong because of the trading activity being on high there. Majority of the new funds and mirrored funds, as we call them, the innovation was led by Hong Kong in this space first. So I'm looking at the, say, futures of African country getting traded inside Hong Kong. So you need not go and invest inside Africa if you want to take an advantage of the proportions there. So because of these innovations, so on and so forth, we are looking at a good hike or salaries in equity research, as well as it is there in investment banking and private equity space. These are some of the companies which are hiring the top bracket, as we call it. So JP Morgan, Bulge Bracket Investment Bank, Citibank, DBS specializing into few areas, ABN AMRO purely on the commercial as well as investment banking side, and so on and so forth. Of course, HSBC is the leader in banking activities on the commercial side when it comes to Hong Kong. So they're also hiring at a good pace. Now, we look at a model, basically, a model which will give you an idea of how does a financial model in totality looks like. So this model was developed by our team at EduPristine as for LinkedIn's IPO. It was a pre-IPO stage model which was formed. There's a gross understanding of overall summary of how LinkedIn looks like. Yeah. So let's start with the basics first. How does a model look like? You're starting with the profit and loss account, which is inclusive of 2 things here. That is historicals and projections. Now, the actual numbers are always kept in a different color. The formattings, etc., will be taught over. I'm looking at these numbers of forecasted being drawn down from my revenue buildup. So any financial model we are looking at for any particular company has to be really lucid. It should give a clear-cut understanding of where the numbers are coming from. And if I have to change any number, say for example, I'm looking to change the number of registered members for 2011 in 2010, not being grew by say 10%, 9%, but by say 11%. The moment I change this particular number, that is from 9 to 11%, the whole calculation should change and it should give me a final valuation number. So it has to be dynamic. The moment one number is changed, the whole model should change. That's how it is linked. The difficult aspect in any model is to understand how do we bring the assumptions. So we look at various ways of how do we value different kind of companies in different sectors. I cannot have same metrics to a metals and mining company. I cannot have the same metrics for bank. I cannot have a similar metrics for assumptions for project financing company or a financial services company or into a real estate. So all these sectors are valued differently. They have their different drivers, and all these will be thought over. So I'm looking at a LinkedIn's model. So based on what the business model of LinkedIn is, this has been formulated. These are dynamic bars which are used. I can draw them up and down. It depends upon your selection, whether you want to keep it based on your CAGR growth or you want to keep the scroll bars. So if I keep a scroll bars, I can change them accordingly. So formation of your list, scroll bars, and revenue builder. This includes the historicals. The ones in the blues are historicals, and in the blacks are the formulas being used to arrive at the valuation. So I'm looking at a 12% growth, and so on and so forth. So profit and loss account is an end item. The previous item is revenue buildup. We are using assumptions, using cost buildups for assessing the cost, etc. So we have assumptions for balance sheet item as well as profit and loss item. I'm looking at an asset schedule. Now the asset schedule would change as per the sectors. I might look at different valuation methods or for depreciation in one country, in another country based on the accounting laws, different methods. So how to make these methods as well as the rates dynamic. I can look at a straight line method or a diminishing and so on and so forth. So this is the overall model for asset schedule, computer equipment, software, furniture, and so on and so forth. The equity is valued. I have in Hong Kong, we have HK listed as well as Chinese listed companies do come, and you have dual listings. When it comes to Europe, also there are possible dual listings, and so on and so forth. So I'm looking at various asset classes, the structured instruments which have been issued in the market, say for example a mezzanine debt. So how to value a mezzanine debt, how to look at the options which are being issued to the employees inside my weighted average shares outstanding, how to value each and every structured instrument which has been issued by the company apart from the normal equity in debt. I know there must be a few questions, but just keep writing down. We'll take that at the end of the session. So this is for equity. Based on this, we'll formulate our income statements. So if I retrace that particular, so it's coming from total hiring solutions revenue. And I'm looking at hiring solutions, marketing premium, and so on and so forth. So this is a very clear and lucid explanation of LinkedIn's outlook when it comes to revenue. In a similar fashion, we'll see how our working capital cycle is going to be based on the assumptions which you have placed on the balance sheet, and so on and so forth. So this is how my balance sheet would look like for LinkedIn. This is my profit and loss account. We'll formulate the cash flows for the historics as well as the forecasted numbers. We calculate ratios at various levels, that is profitability, investment ratios, activity ratios, solvency, leverage ratios, and so on and so forth. So we have all the 360 view for any particular company, whether it's going high on leverage, how its overall gearing looking like, whether it has got enough coverage to pay up its interest and debt, how they're doing when it comes to margins as compared to the other companies, so on and so forth. Once these are formulated, I'm looking at my overall valuations. Now for valuations, it's again, there are various methods. We have DCF, we have relative valuations, we have precedent analysis, we can look at options valuation. So there's valuation possible of oil companies and metals and mining companies through options valuation by using real options. We can look at DCF. This is a classic example of DCF. We have used the DCF as well as the relative valuation and trading comparables. So LinkedIn is getting compared with Google, eBay, Amazon, Baidu, and Oracle. We'll use their average ratios, etc. to arrive at. So this method, when compared with the peer group company, is trading comparables or relative valuation, as we call it. When we do it on the basis of historical transactions, then it's based on a precedent analysis. So these are the IPOs which these companies had come up with, and what were the valuations they were commanding at that point of time. The 1 year forwards and the 2 year forwards, so on and so forth. Once these methods are formulated, we try and put that into a one format. That's in form of a football field. So the football field would actually give you a complete idea of how does my valuation look like for a particular company through different methods. So I'm looking at a valuation multiple by P by BV. I'm looking at a P by E multiples. I'm looking at EV by EBITDA. So we'll calculate the value. For example, we got a 33 as in per share price as per the DCF. We have got a share price basically at 31 and 66. On the basis of P by E, we have got 26 and 62, 23 and 29 based on a P by BV. So that's what we are plotting here, a value per share. That's my share price. So that based on a sector, we can come at a certain conclusion. Like what's the value that this company can command on an average. This would give an overall idea. This would remove all sorts of biasness, etc., which are available inside a particular model. Now, once I've formulated my assumptions, my revenue, my cost builder, my asset schedule, equity, and dew point analysis. Now, this would give a graphical representation of how much net profit margins, earnings onto the sales, etc. I'm looking at. This is based on a historical, the recently available historical data. So that's what it is based on. So I'm looking at an income statement, balance sheet, and so on and so forth. Then your profit and loss balance sheet and cash flows, the ratios, valuation based on different methods, trading comparables, precedent analysis, and football field. Now when I combine this overall based on how do I look at a LinkedIn as a company when it comes to value for stockholders, value for different new investors, the potential one, and so on and so forth. So this is a graphical representation we can use. This can change based on the company to company basis, especially the sector to sector basis. And more or less, this is how we'll represent. Now, in this model as well, or in this representation as well, we have to make it in such a way that it's dynamic. For example, the check-in boxes. The moment I check the marketing solutions, I should get what has been the spend on that. What's the premium subscription? I'm looking at the new issues, if at all they are coming. What's the stockholders' equities growth that we are foreseeing in next 5 years? The profit before taxes, and so on and so forth. So these are the, I can compare my stockholders' equity and cash equivalents. I can compare my premium subscription, which I'm going to command based on the expected increase in equity. Next we have is a presentation of ratio analysis for the LinkedIn. Because if we'll do that in this particular format, it will be difficult for a client to comprehend. For example, if I'm going to a Fortune 500 company, as we used to do from UBS, we used to present it to the client in such a way that they're looking at presentations. They don't look at the Excel sheets, more or less. So yeah, the Excel sheet would give a good output onto the side. So we'll use graphical representation of this sort for presenting the ratios, etc. So these are profitability ratios. Again, it's dynamic. So we'll have put these check-in boxes. The moment I click, how does an activity ratio looks like, or the liquidity and profitability, and so on and so forth. So we are seeing a trend of rising from 10 to 11, 11 to 12, and so on and so forth. So this is exactly how a typical model would look like for any particular company. But the moment I change the sector, the dynamics would change slightly, but the core would remain same. So we look at what possible methods of valuations we will see in various sectors. What are the possible methods which we'll deploy. So a structure of a management buyout or leverage buyout would be slightly different when we are doing the analysis of LinkedIn in a straightforward manner, that is for IPO. So an M&A transaction would look different from a public-private partnership transaction for manufacturing of roads. So if I have to put a lane of 100 miles or kilometers, then that transaction or that model would be different from what it would be for some company like Accenture or Infosys or IBM and so on and so forth. So what are the highlights of, how does a class would look like financial modeling in Hong Kong? This course would cover all the aspects which we have discussed and slightly more than that, because the specifics of the sectors can be dealt in quite deep manner. So we are looking at 4 full days of classroom trainings by the industry's experts, all the professionals which are coming and giving you the training from EduPristine has some background, that is, they are from the industry. So they already dealt with the transactions, they already dealt as in themselves with by a research analyst kind of a field, they are managing portfolios somewhere, and so on and so forth. So there's a full 4 days classroom training provided by industry experts. There's video tutorials which are available for 20 hours. If there is any part which you want to go through once again, there are tutorials. A lot of models as an example. It's just like you got it for LinkedIn. So you'll get an example model, sample models. So there are more than 20 sectors if I talk grossly across the globe. Yeah, so we are looking at majority of the sectors. For few sectors you can review or you can look at the model examples. You'll get PDF guides, unfill and fill Excel templates for the practice sessions, 24/7 support for the doubt clearing, and of course we are approved by the GARP and CFA Institute for CE credit hours. So that's an additional advantage that you'll get from EduPristine. Now what we are looking at once we are done with the financial modeling class, you would be in a position to clearly and in a robust way generate financial models for any company in any sector across the globe. And those would be error-free, clear models describing the valuations, charts, etc., etc. So those are handy in across financial sector, in hedge funds and pension funds, in investment banking and private equity firm, or when it comes to a securities house or proprietary trading for that matter. And you'll understand which are the gray areas where usually people commit mistakes when they form the model. So catching a mistake in a model is a very tedious task when you're not trained onto it. But when you are trained onto it, it's a straightforward task. You can catch easily. So you learn few skills which are less commonly known Excel features. How to quickly move from sheets to sheets and workbooks to workbooks and so on and so forth. How to tweak the formulas in a fastest possible manner. How to form a model in the least possible time. Now, these are some of the details of the batch that we're starting in Hong Kong. It's a weekend batch that's starting from 22nd February. That is weekend only. That will be taken up in the weekend. That is Saturdays and Sundays. So that's starting from 22nd Feb. And you have weekdays batch. If we have got enough time over the weekdays, then we can take up a weekdays batch that's starting from 25th Feb. There are quite a few enrollments which have been done already. This is a costing structure, $2,599 US, and the person you have to contact is Sang Lee. We'll give you the details at the end of the session, or you can note it down right now as well. Some idea or details about our team and overall organization. Now, we have been provided certifications on CFA, FRM, PRM. We are providing training for all these courses. We have taught more than 10,000 financial professionals and students across the world in 40 plus nationalities. So we're already present at various locations. We'll show that. And a few of the trainings which we provided among the Fortune 500 companies. Inside the companies we are talking about as EY, Bank of America, JP Morgan, and so on and so forth. We do the financial modeling in Excel, business analytics classes. We're offering 25 plus courses through classroom trainings, online videos, question banks, crash courses, and webinars, etc. Classroom training across cities in US, Singapore, India, Mauritius, Hong Kong, so on and so forth. More than 1 million man-hours of training have already been conducted. Now, our investors are from ASL Partners, Dr. Mark Mobius, the giant known into the bond markets from Franklin Templeton, and Rajesh Sangha, again from Franklin Templeton. So these are our investors. One of the good or the major highlights that I'd like to tell you is for our company is whosoever is going to be providing the training is already experienced into that particular field from and they're already formed they're formed more than sometimes 50, 100, 200 models onto their own based on their experience. So it's purely from the industry. We have authorizations from leading financial certifying bodies in the world, as we see, CFA, GARP, FRM PRM. So we are covering risk management as well as investment banking side, as well as research side, sales and trading, and so on and so forth. So we have provided training some of the corporate, and we have provided that into international institutions as well. Now these are the locations we are already active, and we already conducted trainings. So across Europe, North America, Middle East, we're looking at Asia completely, Hong Kong, Singapore, Southeast, and so on and so forth. These are the topics which will be covered into our courses. As I said, we are looking at equity investment, valuations, leverage buyout, market risk, credit risk, CFAs, capital markets, risk management, real estate modeling, finance for non-finance, equity research, IB, which is a vast thing in itself, financial reporting, quantitative analysis, and so on and so forth. So it basically covers all the verticals across the possible verticals in the financial sector. Thank you. If you have questions, we can take them one by one.
Thank you, Ravi, for the insightful thoughts on financial modeling.
Yes.
I request all attendees, if they have any questions for Ravi, feel free to ask now.
Anyone, any questions, any specific questions on what we are going to cover, etc., etc., you can ask. If you are crystal clear onto this, then please note down the details. Yes, please. Please note down the details of Zhang Li.
Yes.
I guess we are crystal clear on the thing. Great.
I have a question for you.
Sure.
There's a question for financial modeling. Do I need to know Excel thoroughly? It's from Arvind.
For financial modeling, of course, the basics of Excel is what we look at when you're coming to the class. So if you are through with the basics, that's fine. The advanced Excel in those functions we can learn during these sessions. So it is like if you're good at them, that is the advanced function, it's an added advantage. But if you're not, then we can certainly look at those advanced functions while presenting inside the financial modeling class.
And one more question, Ravi, for you. Are there any prerequisites required for this course?
Prerequisites when it comes to education, etc.? No. I mean, even if you have just completed your master's, or you are doing your master's, or if you're working somewhere and you feel that there's a need for financial modeling into your job, etc., then you can take up this course easily. So there are no prerequisites, but certainly this would act as a prerequisite when you'll go out in the industry.
Any more questions by anyone who wants to ask right now can post their questions. You can find the link of the classroom program on the chat tab, and you can find the more details about the program there. Ravi?
I'll just give you one last experience. Yes, that when we were at working at UBS inside UBS, the core thing that you used to look at any candidate was whether they are in a position to not just formulate but present the matrices or valuations, etc., clearly or not. So it's a combination of all those activities together that would lead you to that position what you're seeking for. So be it Wall Street or be it inside Hong Kong.
Ravi, there's a question.
Okay.
It's by Sagar. He wants to ask, he's doing CCRA right now, and how this is related to CCRA course.
So there are certain areas inside, say, financial modeling, or certain sessions which we'll cover upon to the risk and matrices and the valuation side. So you're covering both of them together. Now, when I look at CCRA, my prime goal is how my matrix of the risk, etc., looks like. So in that case, your modeling and how do you form a model in such a way that you cover all the quotients or inputs from the risk matrix side into your applications. So I'm looking at GARP, I'm looking at various different, say for example, we have into risk management a few areas related to where I have volatility models and so on and so forth. So those models, etc., would be covered up in quite depth during a financial modeling course. So there would be a separate parameter, you can say, time allocated to those kind of models as well.
Any more question for Ravi? Please feel to ask now. Ravi, any concluding words you want to give to the people?
Yeah, sure. I mean, see, Hong Kong is very close to us. Like we always do business there. From when I talk about we, means our company as such, and from EduPristine side as well. So it certainly is in tough competition with Singapore when it comes to becoming a financial hub for Asia. So the government is trying at a full stretch to see majority of the brains, etc., are attracted into that area. And this is the inevitable part. The financial modeling is an inevitable part when it comes to being inside a financial industry. If you're going directly, there are chances of I have seen people getting fired onto that side. That is, if they are not good in financial modeling, they don't get hired, and so on and so forth. So that's all about it.
Thank you, Ravi. Thank you for your time. I think everyone is now clear about what is financial modeling is all about, and they can make a wise decision for themselves. Thank you, Ravi.
Sure, I agree. Thank you.
Thank you.
The organizer has ended the session.